Good morning to everyone. Welcome to this World of Open Account webinar. We have been talking to you since some time, and recently we established the Alternative Finance Learning Lab. My name is Andre Kassaman. I'm working with Eric on the World of Open Account, and we are delighted to bring to you a new initiative we started this summer to focus on the alternative models in terms of business models and technology that is supporting our open account financing business. So today we want to talk to you about tokenization and digital assets. I recognize this may be a theme that you rarely heard of, and this is why we're bringing it to you. It's because it's offering new capabilities. The Alternative Finance Learning Lab, let me give you some details about the opportunities for you to join it. It's a series of sessions that will focus indeed on the new capabilities, new platforms on the origination side mainly, focusing on SMEs, new technologies like distributed finance, blockchain, tokenization, and digital assets, and new opportunities also, such as getting liquidity from retail investors. So we're really trying to focus on what is new compared to the traditional models and the technologies addressing traditional models. So this learning lab is one of the different learning labs that Eric set up as part of the World of Open Account. And it's a place for you to learn about the new options, and also if you are a service provider, for you to share your value propositions. For instance, on the 7th of July, we had a first session focusing on the various funding platforms, mainly on the origination side. Today, we're talking about tokenization. And in the future, we're going to talk about additional technology options and business models, bringing the right funding to the SMEs, which is definitely a major focus area, but not the only one. We believe there are opportunities for collaboration because indeed those platforms, those new ways of working are highly specialized, which opens the door for the various platforms and players to work together. We also want to bring webinars, some demo capabilities. So as for today, we're going to run into demos, sharing real-life examples of how those new technologies are being used. If you're a service provider and you want to join the Learning Lab and you just need a WOA membership, which gives you access to the whole of the WOA value proposition, and this is €2,500 excluding VAT per year, which is valid until the end of 2021. That's really for service providers. And of course, those who are joining to learn and listen are welcome, even if they are not WOA members. So I think this is positioning the new Learning Lab clearly. And without further ado, I'd like to introduce our topic of the day, tokenization and digital assets. Personally, I'm very interested in this theme because I see regulators, I see central banks more and more engaging in digital assets, sometimes also in digital currencies. And tokenization is definitely something we can compare to securitization. It's transforming an asset into something more accessible for the one who want to get an exposure on the trade asset. So today we have the pleasure of having Atul Kekade, representing XDC and TradeFinex, who is an expert in this area and who, as a serial entrepreneur, is now focusing exclusively on bringing this technology to trade as an asset class, basically trying to bring new liquidity sources, mainly from retail investors, but not exclusively from retail investors, to those who need the liquidity, who have the assets, such as funding platforms. So Atul will introduce us to tokenization and to how XinFin and TradeFinex are making this real for platforms and for originators. So without further ado, I'd like to pass on to Atul for guiding us through the topic.
Thank you, Andre, for your introduction. Thank you, Eric. Thank you, Ritesh, and thank you all the WOA community here. This is my second session with WAO, and it gives me a good kind of kick to do these sessions together because it's just the right audience for presenting the innovation that we are showcasing and to a very receptive kind of market. So we'll make this session really simple. While we are presenting the technology and infrastructure that some may feel is a part of the very far future, it's not, and that's the agenda that we have today. That we are doing something that will really unlock the capital from alternative asset investors, the new breed of alternative asset investors, to the trade finance, trade instruments industry, eventually benefiting the MSMEs. Andre, maybe we can move to our next slide. Yeah, so this is a very simple kind of representation of what we do here. The way currently capital really is coming from, there might be some fintechs there, but at large, the capital that comes in the trade finance, working capital, or SME corporate finance industry is coming mainly from banking as a source, right? So it's pretty much the banks who are funding these MSME funding platforms, and originators are driving liquidity from, and that's not enough, considering how much workforce the MSMEs employ, and it's nearly half of the world's population. And while big companies might go in, and in a recessionary time they go in the market and just fire a lot of people, lay off a lot of people, sorry, and then that's why the governments and even entities like IMFs, World Bank, you may have seen it increasingly from them, that everyone is now looking towards the direction of driving this liquidity to the MSME sector, to the corporate working capital sector from these alternative asset investors. So that's where we have positioned a network. So what you see XDC here as is not a single entity. It's actually a network. It's a decentralized market infrastructure and liquidity network that is not coming from us. We are just the original makers of this protocol and network specifications, but eventually all the alternative asset investors, even not just individuals, but family offices and funds eventually will be running this network infrastructure, as we'll tell about it in the next slides. Okay, so let's look at what brings liquidity to the trade finance market, to the short-term finance market. How do we actually get what we get from the in the supply chain or manufacturing or trade. Typically, invoices is a large number of these instruments that drive liquidity for MSMEs. So I think we dug in on the numbers, and I think it's about 36 billion, which is quite massive in terms of volume. I mean, imagine there is the first thing when there is an agreement to consume a service or a commodity, the first thing that really comes in the picture is an invoice, right? So there's approximately 36 billion in yearly volume. Now, this does not constitute the actual value of it. This is just the volume of invoices that flow between MSME and the big corporate or suppliers and buyers. There are bill of exchange and of course drafts. We don't have a full number on how much that is, but I think it's a fairly large number as well. A letter of credits is a very proven instrument that's widely used in the trade finance market, and that's about $7 billion a year. And If you look at all the trade instruments that drive this value for the MSMEs, that drive this liquidity for MSMEs, is approximately 17 trillion US dollars. And still, a large part of this liquidity is only coming from the banking market and somewhat from alternative asset markets. It's not that large at this point of time, but clearly you can see that there is such a demand for liquidity from the MSME sector. And if you only look at what banks are able to cater to, this clearly does not, find the takers on the other side, just because it's a very centralized infrastructure on the other side of the equation. So what are we really doing? I think the time is really relevant for it right now. uh, SEC came up with their own circular a couple of days back. And what the regulators are really trying to do is trying to open up the P2P finance market, all the alternative asset investors, accredited investors. Now, if you look back, again, going back to that point where banks pretty much invest a large chunk in those trade instruments. But what really regulators are trying to do now, and as the peer-to-peer finance market is opening up, they are trying to define this alternative asset as an investor class, and putting them in a proper specifications of what they look like. So if you look at jurisdictions like Singapore or Abu Dhabi global markets, or even other jurisdictions across the world, they pretty much define alternative asset investors, largely retail category, or this may be even institutions. This is the minimum ticket size. Institution would obviously be multiple X in these numbers, but pretty much this is what it looks like. So they are looking at 300,000 to 500,000 US dollars in net worth for an individual or a family office or a fund, and approximate ticket size is something like $50,000. So that's usually the minimum. The ticket size may go a little bit lower or higher than that. And obviously this is all subject to a stringent KYC AML checks that that the investors have to go through even after proving the first two requirements. So this is the magic that we're working on. There is an entirely new breed of alternative asset investors that's emerging in the market. And who are they? They are the guys, so if you look at a traditional investors, let's say I'm a traditional investor, I may be able to prove my net worth in real estate terms. Like, let's say I have maybe a $1 million worth of property, and I may have certain income proof that allows me to invest. But that number isn't as much as it should be. Obviously, the world needs much more liquidity than that. So with the new specifications and the way the digital asset markets are growing, there are these new alternative asset investors emerging who have liquidity in at the mobile phone, or at the really reach of their palm. That's where they can invest from. So they have access to all the liquidity with a click of a button. They manage their funds from there. And imagine what kind of investors these are. So if you look at the numbers, this could pretty much be maybe a large sum of world's population, maybe 10-20% of the world's population who could participate in doing that. Now, what we're really trying to do here is making it simple, and yet being able to position ourselves firstly to prove for an alternative asset investor as an accredited investor himself. How do we do that? So one of the first things that we do is we also consider the virtual assets. Let's say XDC, which drives the Zinfin network token, is a virtual asset. And what you can actually showcase through a KYC regulated custodian is that how much virtual assets you are actually holding. So what is your XDC net worth, right? So let's say if a jurisdiction has its own net worth rules for proving your net worth, you can also prove how much of the virtual assets that you're holding. Now, looking at what we are about to showcase you, it's a snapshot from a regulated custodian who have already done a KYC AML on a family office's holding. So we've actually managed to get a snapshot of what their asset declaration looks like. So an actual digital asset custodian with a KYC AML check can actually issue this, can actually verify that this is an actual net worth of this family office that can actually classify as an alternative asset investor. And this is also, is very liquid market. It's not, real estate sometimes in a bad market or even in good market, you're even if you prove your net worth, you may not be actually be able to get liquidity for it. But here you are able to consider the rate of the tokens and what's your virtual asset holding to actually showcase what your net worth looks like. So this is an actual snapshot that we've pulled from a family office that does classify as an alternative asset investor in certain jurisdictions. And this is obviously being showcased on Zinfin Network Explorer. So what you see here is the balance in tokens and the value of the tokens. So as it's basically able to showcase a net worth of the investor to be able to classify them as the first criteria for alternative asset investor. So this is what tokenization is really. I mean, most people kind of think it's it's think of the future. It's not really up there. The market isn't ready for it. What tokenization does is simple. It converts your offline obligation into a fully online digital contract that is now transferable, literally transferable from mobile phone to mobile phone or a computer to computer. So let's say there's a big buyer. It's probably a Fortune 10 buyer and maybe 500 of its suppliers. In a traditional environment, we still have the data or a digital invoice that basically has some kind of obligation from the big buyer towards its supplier that it's going to pay its suppliers to on a particular date. Now, in the process of tokenization, what we simply do is record this obligation into a fully digital form. So not only now this instrument has a fully online, digitally transferable presence, but it is also backed up by a framework that we use that we are just probably going to showcase you now. We follow the standard, the English common law standard framework, which also does an offline signing of the digital documents between the counterparties to record that obligation, so that it can be actually challenged in the courts in certain jurisdictions, like let's say Singapore or UAE, in a market like Abu Dhabi Global Markets. So what you see here is what we're going to show you after this is an actual process of digital tokenization. But what you see here is the agreement that is being drafted for the process of tokenization is an actual is a standard draft which is drafted obviously by a set of lawyers, and it follows English common laws, and it can be enforced in a particular trade jurisdiction. For example, what we are focusing on right now is obviously Abu Dhabi Global Markets, where we have our own Reg Lab license, and Singapore, where Zinfin is incorporated as well.
So indeed, we're going to show a demo of the tokenization using QuickBooks as the source of the asset. Let's see if it's working here. So I'll start it now.
Invoice factoring. Log on to tradefinex.org. To add the invoice to blockchain through a smart contract, click on Invoice. Here we see some features of the invoice. Click on Start POC. There are two ways of adding the invoice to blockchain. The first is through QuickBooks, or we can upload the invoice manually. Select the option to connect with QuickBooks. Enter your email and password, and connect your QuickBooks system. Now you can see all the invoices on the screen. Upload the invoice to the blockchain. Just got your invoice added on blockchain. Now your invoice contract is ready to be deployed on our network. It might take a few minutes to deploy on a public blockchain network. You can see your bond deployed on the network and check the hash of it. We invite institutions and SMEs to contact us for the production system to connect with any traditional system like SAP, PeopleSoft, or Oracle.
Thank you, Andre, for playing that. So what we really saw here is a process, the digital process that we're using to record an offline paper-based obligation.
Which is a blockchain company and our partner.
Yeah, I think there was some playback coming from the video, which is gone now. So what you really saw here is an offline obligation that's coming from the data sources, such as the ERP systems from the buyers and suppliers, or the small business accounting systems. Getting those data sources, getting that obligation that okay, there's an actual buyer who's going to pay the supplier. So capture their invoices or purchase orders, and then then actually convert that into a digital contract or a token, which is also backed up under certain regulatory jurisdictions. Now, this is a massive process. Now, this is what we really want to do. As you saw on the first few slides, there is only the invoices are almost like 36 billion in the global trade market, and then there are letter of credits and other trade instruments as well that drive 17 trillion of liquidity for the MSME market, and obviously help running the global economy. So this is a very niche feature. It's a decentralized feature, of course, so we don't really control it. All the participants can come in, and it's a part of an ecosystem process that once you actually start accepting the digital recorded obligation or the digital identity of your offline data sources and your commitments, or your invoices or trade instruments, then you are able to connect it to all the new breed of alternative asset investors that we also saw in the two slides prior to this, where people have an actual online liquidity that can be used to fund these trade instruments. And this is what we're doing. So this is what XDC protocol and TradeFinex is all about, that we want to be the largest decentralized market infrastructure and liquidity source for this massive market to operate and drive liquidity from. So even if there's a family office or alternative retail investors with a ticket size such as $50,000, or a high net worth individual or a family office which comes with a bigger tag of investment, let's say something like $500,000, or there's a massive institution which would like to come in and buy maybe a few billion. So this ecosystem, once the standard gets accepted by the market, and this is what we're actually doing, we are promoting the ecosystem, getting people to join the network and accept the standard. That's when we really start unlocking all the liquidity that's available there for the market, for eventually benefiting the MSMEs. you'll see here, we have a aggregator kind of model, because the network that you see, XDC network itself, is a decentralized network. So there are all the master nodes, family offices, funds, individuals who drive that liquidity. But what we can see here is a aggregator screen, which we basically plan to promote to the originators, or banks, or fintech platforms who are either licensed in their area for doing the P2P financing, or who want to distribute their origination instrument to a alternative asset investor. And then maybe if you can open the markets page.
You want
So one of the
yeah, is that fine? Yeah.
yeah yeah.
Yeah.
So this is one of the first implementations, or a POC pilot, that we are working on right now. It's a Singapore-based MS regulated P2P vendor. What they really do is they basically connect the government-backed buyers and their suppliers, and enable a P2P lending from alternative asset investors to that segment. So they've already done about 500 million plus in alternative asset investment, peer-to-peer investment to these MSMEs that are basically backed by the purchase obligations from usually government-backed companies. And this is one of the first integrations we are working on, but you'll see a lot more platforms, origination platforms, fintech platforms, even banks coming up on your left-hand side screen. So you can, what the platforms can do here is they can unlock the liquidity. Through this integration, what we're doing is we are showcasing, your platform to the breed of alternative asset investors, whether they are retail or high net worth individuals or family offices or funds, so that you can list yourself here and get access to liquidity in whichever form. So whether it's the traditional fiat markets, or whether it's a concept called stable coins, or even XDC, which is a token on the XDC network, all are fairly liquid. So you can actually use that liquidity for funding. So this is one of the first integrations is looking like. Again, this is being expanded. We are working with other platforms as well for getting them listed on this markets aggregators page. And this is what I think our intention with the WAOA community as well, that we want to invite as many of the fintech originators or platforms to come in and list yourself here to start unlocking the liquidity from alternative asset investors. So this is one of the flexible options that the network provides. So not only you can get your returns or interest in the traditional fiat currency, but we provide hybrid options. So if an investor is looking at interest in the form of tokens only, or stable coins, which are basically digital representation of a same fiat currency, so they can receive that on their mobile phones, or they can get a utility token asset like XDC as their interest on their directly their wallets, which can be liquidated in the regulated exchange markets worldwide. So it's an interesting model, basically meant to encourage the participants, gives them more flexibility, more leverage if they wish to choose it. And this actually brings a very versatile kind of encouraging feature to this new breed of investors, who can basically leverage their participation in the network in a much larger way. So we're looking at some of the stats. So the network is live, of course. We are not talking of POC terms or something. The network is live. There are 108 master nodes, which are individual investors who are already running these nodes. There are 6 backup nodes as well. So basically, nodes are the decentralized participants in the network. It may be a language that's not so commonly used. in the for or may not be so easily understood by the WOA community. But you can take it as participants. So let's say eventually our target is to have someone like Blackstone or KKRs or the pension funds to run their own masternodes so that they can also participate in the liquidity for this market. Currently, the daily volume of XDC is approximately, actually, it's probably more than that. We need to correct these figures, but that's okay. So it's anywhere between 2 million to 4 million, 5 million range. So that's a daily volume. So that is the liquidity that we can unlock for the platform participants here. And it's a future. Again, we're not trying to boil the ocean here. What some people may think that, look, this is still something of the future. It's not. Everything starts with a very small market share. So if you're looking at 17 trillion in global trade liquidity, let's say there's only a 0.1% acceptance to this model. That's a good start. And the FOMO will start coming in. So basically, whoever once there's an initial participation, whoever is late, right? They are the ones who will seriously get neglected by the market. So that's why there has to be that urgency from platforms and alternative asset investors to come in and participate in this decentralized market infrastructure that we're building.
Very good. Thank you very much, Atul, for those insights. So I understand there is a call to action to DOA members, whether they're acting as a SME finance platform or as a factoring company. There is an opportunity here to get more liquidity from certainly non-traditional funders, such as the retail space, using the peer-to-peer network. So is that okay if they come back to you?
Yeah, that's absolutely perfect. So we are pretty much there, open. There are website links. We can be contacted through WOA as well, or directly, or whichever way. For the participants that wish to go ahead and participate in building this network together with us.
Do they need to operate themselves on blockchain in their origination services, or can they be traditional players that just plug into the peer-to-peer network you described for the funding side?
So we are very flexible in the integration. So we understand that there might be big companies who are sitting on a lot of legacy infrastructure. So we don't want them to change anything. All we give them is a very robust middleware. So whatever platforms they already have, they can just connect their existing legacy systems through a middleware and still participate in the network.
Okay, very good. And I understand the example you shared with here, Validus, is an early adopter that is operational. Where are they based?
Yeah, so they are based in Singapore, and they are licensed by, of course, MAS, and we are working with other regulated originators as well. Am I clear on the connection? Is my connection breaking up?
Nope, that's fine. It's okay.
Yep.
So that's your the early adopter. They are using a peer-to-peer lending platform, as we can see on the screen here, themselves. But basically, any type of origination mechanism can plug into XDC network for the liquidity side.
Yes.
I understand. Okay.
Yes.
Absolutely. I think this is quite interesting indeed for the also alternative space and for the smaller factoring companies and for the peer-to-peer platforms that are coming up and are all looking for financing options. And as Andre said at the beginning of this session, it's a sort of alternative to securitization. So I really think this is an interesting evolution. One question that probably the traditional factoring people will have, and I'm one of them, is who bears the risk? Because in terms of the investors, You are investing at the end of the day in a open account invoice, and we all know that there are risks involved for non-payment, starting with the insolvency of the final debtor up to fraudulent invoices. Are there any mechanisms provided, or is this part of the originator's risks?
Yeah, so we are again very flexible. That's a very good question. Thanks, Eric. So we are very flexible in configuring how you want to mitigate your risk. So firstly, as you saw in the tokenization process, we are recording. So this is a multiple step process. One is if you are an originator which is coming with a very very less risk profile of origination yourself. So for example, in a integration like this, what you see on the screen are the buyers are actually government-backed companies, government-driven companies. So there's a very less risk of default coming in from there, right? But let's say you are an originator who cannot control it till that point, then there is something called a credit delegation. So there is a way to lock the tokens. A third party can actually act as an insurance by locking the tokens or locking a liquidity for the originator to basically safeguard an actual end alternative asset investors. An institution can deal with such kind of failure in a much better way. They can go to courts. They can have their own insurance mechanism, so that basically the institutions can basically deal with this in a better way. But they can lock their own liquidity in what we call a smart contract, and it's kind of very robust mechanism in which let's say a funder is funding an instrument for 90 days, and if the repayment does not come in 90 days, or if there's a default, he'll still get his tokens back in form of liquidity to himself. The risk would be borne by the insurance company or the credit delegator who is locking his liquidity. But they can deal with it at the institutional level, going to dispute resolution and all, without questioning or affecting the sentiment for retail investors. So all that risk is configurable here.
Okay. And the second question I had is in terms of geographies. The whole, I understand from a technical perspective, of course, everything can work from, that's not the point, but legally you can have invoices that are from any geography in the world, any jurisdiction, towards any other jurisdiction, or is it focused on a certain number of traditional jurisdictions, legal jurisdictions?
Yeah, so that's again a good question. So there is no restriction on from where the invoice can originate and from where it can actually flow. What we are putting in as where we are recording this obligations is certain jurisdictions which are global markets. For example, Abu Dhabi global market is a jurisdiction through which you can do a fully online dispute resolution, online settlement and all that. So that as a jurisdiction is not restricted to that zone only. It's like a global market. So even anyone from anywhere can participate through that jurisdiction. It is configurable in that way.
Okay, thank you. And over to Andre. Andre, I don't know if you've seen that there is a question from the floor, but maybe you can take that. Okay.
Yes, thank you, Eric, for your questions. We have another question indeed, and a comment. What a great initiative. So that's for you, Atul. When can we expect the TradeFinex platform to go live for enterprise use? I think you have an answer for that.
Yes, thank you for the question, Roland. And what you're seeing here in front of you is one of the early integrations that we're working on. There are a handful of those that we are working on. We couldn't really rush into this process because this is actually firstly coming from a very much legacy and law-driven systems, right? So, once we have a couple of integrations live and a stable flow of transactions, then the scalability of this is very massive. I understand the intention of the question. We've been discussing this for a while now, but the good part is the timing couldn't be right because of the COVID situation. There is a boost from the entire market, and there's a trend for going digital, supporting MSMEs. So what we're getting is much speedy adoption to what we're doing right now. So I'm very optimistic that we'll have a very stable TradeFinex, scaling up TradeFinex, towards Q3, Q4 of this year, and then obviously have it expanded and do much larger ticket sizes as we grow along and go into 2021, 22.
Is this the right time now to engage in proof of concept?
Yes, I mean, actually, we are much past further than just POCs. The platform is totally live. It can do any scale today. But for a participant, a big originator, and we've seen what is the volume of trade instruments. There are 36 billion invoices, right? So if someone, a big participant with 1 billion invoices, cannot really come in and say, okay, let's do 1 billion and get started with this. That would be obviously not recommended. So they can start small. They can start with POC pilot, but we can transition through that phase in a much faster way.
Okay, very good. Any other question from our participants? I don't see any. Yes. Yeah, we have a thank you comment. Thank you, Roland, for your feedback. So any other question from our panelists or requests for additional information in future sessions? Because indeed we want to bring you through this Learning Lab the very latest and advanced technologies to do things that were not possible before. So any ideas in terms of how we can bring those innovations to you are welcome. So we organize the right sessions for you going forward.
And I would like to add to that, because I think it's a good transition to have my 1 minute advertising Definitely. For the second World of Open Account WOA convention, which normally would have taken place live in Vienna 5 and 6 of October, but for obvious reasons will go in a virtual way. So it will take place now on Tuesday, 6th of October in the afternoon, European time afternoon, starting at 2 Brussels time for 3 hours. And we have indeed one of the 3 panels that are set up. Andre will be part of that panel. And it will really be, a panel is going to look at everything that is going to take place in the future. Well, everything, that's a big challenge, of course, but we're really going to have a look at the things that are new, that are evolving, also as a result of everything that has happened in the past 9 months. So please do not hesitate to sign up for the WOA convention. It is free for WOA premium members, and if you're not a premium member, you can either become one individually or you can ask one of the sponsors of the conference for free tickets. So they will be very happy to help you as well.
Very good. Thank you, Eric. Indeed, I will be there remotely, but important is the content. We'll get through this convention from your 15 speakers. Indeed. So thank you, Atul and Ritesh, for enlightening us on digital assets and tokenization. It's definitely very, very interesting to see how this whole market is moving, how it's being applied to commercial finance, factoring companies, trade finance in general. Personally, I'm very excited by this whole new market, because it will unlock indeed new liquidity pools for trade. And I'm confident that this digital asset space, although it's fairly new for most people, but as I'm also managing my own cryptocurrency portfolio, I follow the news, and I'm particularly impressed by how the US market is progressing in terms of making those digital assets accessible to large institutional investors. So whether it's the Bitcoin or the altcoins, they're working on custodians and platforms, and regulators are working on this. I recently saw the head of legal of Coinbase, which is a crypto trading platform, that moved to the OCC, so a major policymakers in the US. So if you consider that policymakers are hiring technologists, this is a sign that policymakers realize they need to get fresh blood into their ranks, and people who understand the digital asset space. So when regulators get involved, also in Europe, the Banque de France and others, the ECB, certainly with Christine Lagarde, who's coming from the IMF, is very pro digital asset and tokenization, because it will indeed create a peer-to-peer market, a decentralized model for financing that we don't have today. It's still very much centralized, and always the same institutions owning the market. So very interesting to see how this will play out. Would be interesting in the future to bring some of your early adopters to this learning lab, so they can exchange or share their views on their value propositions from their point of view for their clients as well. And in the meantime, we have a question on what is the latest status on the MAS-backed Singapore stablecoin? Is it going to go live soon? Do you have more insights on that?
Yeah, so it's a good question. We actually kind of spoke about it in the last presentation that we did at the Zubi LedCon. And so first of all, it's with a licensed e-money issuer in Singapore. So it's not like that we're working on an official Singapore currency on SGDX. As a platform. It's a framework for e-money licensed e-money issuers who already are regulated by the regulators to issue. Certain jurisdictions like Singapore allow e-money issuers to work with approximately 30 million of stable coin issuances. And that's what the framework is all about. So we want to work more on scale with fintechs and banks that can work with each other, rather than trying to bag the contract with the government on something, because that's obviously possible, but it's not like it won't work and give us the scale, and we obviously don't know the time that it would take for us to take it to that level. But the framework would enable that there can be multiple fintechs, obviously starting with one which we'll obviously be announcing. We're working on a very strong paperwork legal side with that issuer right now, and it will be announced very shortly. But the framework allows a lot of e-money issuers to eventually, work with the existing network to, deploy their stable coins, issue their stable coins, and provide liquidity.
Very good indeed. That's also a trend we see around the world with multiple players. China also is very advanced on stablecoin, from what we can read in the press. So thank you for this. We don't have any other questions, so I think we can close here, and to respect timing and allow you to jump on your next calls and meetings. Thank you, Atul, for your great insights and for joining the Learning Lab. Thank you, Ritesh, also for enabling this to happen. Let's continue the good work and make sure that we can update the OA community on the opportunities to get access to new liquidity pools. And I would suggest indeed, as soon as we can have Validus or another of your early adopters to come and speak, that would certainly be of interest to the community as well. On the participant side, please share your feedback on your expectations for this learning lab. We are all ears, and we'll be happy to adapt our planning of sessions according to your feedback and expectations. Thank you very much, and talk to you soon. Have a good day.
Thank you very much indeed. Talk to you soon. Bye-bye. Thank you.